Hello and welcome back. Today's video is going to be about commercial real estate. With interest rates still high and commercial property values down, it's getting more and more concerning that default rates on these loans might start to resemble 2008. What might this mean for banks and for the precious metals? Stay tuned in because this video will take a look at that. Nothing in this video is financial advice. Thanks for tuning in today, folks. Commercial office buildings have been experiencing decreased cash flow because of remote and hybrid work still being more common today than it was pre-COVID. In Denver, for example, about 30% of the space in downtown office buildings is empty. The Colorado Sun released an article in December referring to these buildings as zombie buildings. In San Francisco, the vacancy rates are even higher at around 33 to 35%. Coming up in 2024 and 2025, there is about $1 trillion in mortgages that need to be refinanced. With vacancy and interest rates this high, it's likely that a portion of these loans will not be able to be refinanced. There is speculation that the Fed won't cut rates until this summer. So after that, it will relieve some pressure on these loans. But any loans that come due before that will have to face these current rates. New York Community Bank is wisely attempting to reduce its exposure to commercial real estate loans right now. I released a video in regards to this issue last summer. I also had a conversation about this topic with Ron on Ron's Basement last year, and I will leave links to those videos in the description in case anyone would like to check them out. If you haven't seen Ron's Basement, it's a highly informative show with daily content that I do recommend. Something else that's important to consider about office buildings is that these properties are losing value. Business Insider had released an article with projections of an additional 20% loss in value for office buildings in 2024. And the article also said that it could take 2 decades before values return to their 2020 peak. It's estimated that 70% of these loans are held by small and mid-sized banks, raising concerns that we could see a repeat of the 2008 financial crisis. Real quick, I'd like to ask if you could please take a moment to like the video and consider subscribing to the channel. Now let's consider what this year might look like for gold and silver. All this talk about a return to rate cuts this year is good for stackers. Gold and silver are likely to rise in price in response to the rate cuts. Because the silver market is smaller than the gold market, if or when investors start to pile into the metals, silver will likely outperform gold during the bull run. I know there have been a lot of negative videos and posts online about silver recently. I encourage you to think of this as a way to shake out weak hands. Both the metals are positioned to do well this year, and silver has outperformed gold during bull runs in the past. I of course can't see the future, and everyone should do what's best for them, but silver demand is projected to be higher than the supply this year. And with a looming banking crisis, it's likely the folks who are able to hang on to their stacks will be happy they did in a few years. Thank you so much for watching. I truly appreciate it, and I will catch you in the next video.